Hello everybody, this is CA Dhananjay Bhave, educator on Unacademy for CA Intermediate Cost Accounting, Management Accounting and Financial Management. In this short video, I am planning to discuss an important concept for CA Intermediate students. The concept is limitations of cost and management accounting. Before I start that, I have a small announcement to make. Yashas Academy, in tie-up with Unacademy, has come with a new batch for CA intermediate students planning to write exams in May 2023. The batch is called Excel with Yashas for May 2023. Group 1 classes have already begun from July 13. Once we complete Group 1 classes, we will be starting with Group 2 as well. All the classes will be done 100% in English. Here are the features of the batch. Entire batch will be based on the latest ICAI syllabus. You will have revision and practice session. Continuous question doubt solving sessions will be done by every educator, and you will also have unlimited access to live and recorded classes. Here is the timetable for our upcoming batch. Mayur sir has started accounts from July 13. Vijay Raja sir will be starting law and taxes from July 18th and August 10th. Ravikant Miriala sir will be doing accounts from July 23, and myself will be doing cost accounting from July 18. So here are the educators who will be teaching the subject in this particular batch. Mayur sir, Vijay Raja sir, Ravikant sir, and myself, we will be handling all the classes. And here is the achievement, all our CA intermediate students. You'll be happy to see this. We have got foundation ranks. Foundation 136 students have secured distinction marks. We have got all India ranks in the latest examination and all India ranks at both intermediate and final level. We have added evaluated test series feature where tests will be conducted after completion of 40%, 80% and 100% of the syllabus. All subject tests will be conducted after 30 marks, 60 marks and 100 marks. You get one-to-one live mentorship for iconic students, and we conduct daily scholarship tests as well. With iconic subscription, you get all the benefits of Plus subscription. In addition to that, you will also get the physical copies of the printed material sent to your house, and you also get a chance to interact with your mentor one-to-one. You can take 12 months, 18 months and 24 months subscription. When you take subscription, use code YASHAS to get maximum discounts, right? So here is the discussion on limitations on cost accounting. The first limitation of cost accounting is it does not use time value of money. Time value is basically reducing the value of money over a period of time. Value of 1 rupee today will not be equal to same 1 rupee after 1 year, 2 years, 5 years and 10 years. This particular reduction in value of money, which is very much used in financial management, is not at all used in cost and management accounting. Second one, most of the costing techniques do not use inflation or deflation. As you're aware, a lot of our formulas, lot of our discussion are based on an assumption that there is no inflation, there is no deflation, and practically this is not very much appropriate. Next one, cost accounting is more suitable for companies that make homogeneous products or service. Homogeneous product is where you make only one variety product, only one type of product. Assumptions are subjective and may make the data incomparable. Definitely, lot of cost accounting techniques, cost accounting formulas are based on the assumptions, and the assumptions need not be accepted by everyone. Every branch may make its own assumption, department may make its own assumption, every segment of the business, they can make their own assumptions, and because of too many assumptions, it may so happen that the data is not at all comparable. Next, it does not consider certain cost in costing, which creates difference in estimated profit and actual profit. As you're aware of this, lot of cost items are not considered at all in costing. We consider pure financial incomes and expenses in P&L account, that is in financial accounting, but we don't consider that at all in cost accounting. This creates a difference in the profit between financial accounting and cost accounting. As you're aware, items like interest, bank charges, goodwill written off, preliminary expenses written off, bad and or doubtful debt provision, these items, tax provisions, dividends, reserves, most of the items that are very much used in financial accounting are not at all used in cost accounting, and because of which you create a big difference in the profit between financial accounting and cost account. Last one, absence of consistency in cost accounting policies between branches and departments. Unlike accounting, unlike tax, we do not have a law or an act which tells us what exactly to be done. So what happens, lot of things are very subjective and it is going to differ from person to person. The principles, cost accounting concepts aren't as, as strict as I can say, as strict as what we have for accounting or for income tax. I cannot deviate from the accounting standards or accounting concepts and conventions. I cannot deviate myself from income tax provisions. But in cost accounting, you do not have anything like that. Because there is no act, there is no law, the consistency is missing, and because of which most of the data between two companies, 2 years, two branches, two departments, it becomes practically difficult to have a comparison. So these are some of the limitations of cost accounting. Quickly to revise, number one, it does not use time value of money. Number two, doesn't consider inflation or deflation. Number three, suitable if you're doing homogeneous products. Next, subjective assumptions, and lot of cost items are not being considered, which will create a difference in the profits between financial accounting and cost accounting. Yes, I hope this video helped you. Thank you so much for watching. Bye bye. Take care.